but it's been a quick ride for the industry. Fast forward, so mobile money comes in, literally very little happened in the space. It was only in 2015 that we had the electronic money issuers and agents guidelines, which was passed by the Bank of Ghana, and that then separated the two entities between the mobile money as an entity and then the telco. Because the challenge was a telco could not deliver financial services, but mobile money was primarily involved in a kind of like a quasi financial service. Of course, a lot of people emphasize on the distribution and the distribution architecture of the mobile money system, but an important part has always been the fact that they are essentially a financial service because they are connected directly to what is called GIPS, which is basically the central processing platform of the country. They're also regulated by the Bank of Ghana. Their services are regulated by the Bank of Ghana. And then also, banks are directly integrated into mobile, what people often refer to as partner banks. They are integrated into that architecture. And so, the development of mobile money was important for that separation to happen, for it to really take flight. So what probably was less than 2 million transactions after all this time suddenly went up to I don't want to give away some statistics, but by 2020, we could literally see that mobile money transactions had, for instance, exceeded check transactions. So something as new as that. In terms of the footfall of mobile money, in terms of the number of customers that mobile money had, and the number of times they interacted with the platform, it has also exceeded all banking distribution systems. Of course, a lot of these things are really relevant in terms of understanding where we've come from. And of course, with this technology also meant that other services could also leverage on it. One of that is the payment aggregation, which then came in to support the interoperability functions. So if I needed to send money from one electronic money provider to a different one, I could basically be able to, because there was a central switching system, I could move money from one point to the other quite seamlessly. And so the fintech landscape, in terms of the market, it's really been quite active. Where we are getting to now, it's not just about solving for access. The initial value proposition was around how do I create access? The next layer is now going to be how do you provide quality products to specific segments. And so you'll find that today we have digital credit on mobile money. You know, something that for a long time was not, people didn't think much of. They thought that this was pretty risky segment. People had appreciation of, like, you know, microfinance and how some people got burned and so on and so forth. But when you turn and look at the amount of reach and the impact that those segments are making, it's really quite fantastic. Culture can be good and can also be bad. One of the areas is if our culture, for instance, speaks against dishonesty, then maybe the issue about credit, how credit is treated, how people's commitments to things like responsibilities come into play. But of course, these things, there's always exists in quite a spectrum, you know, and across society. So different people are going to behave in a certain way, and different people are also going to behave in another way. And that is really relevant because in terms of the influence of culture, it can be, it's both ways. But one of the areas that I think that our culture probably, probably helps us is, we're pretty open people. We are happy people. We are accommodating of new ideas. There are also instances where there's sometimes a bit of a tack when it comes to accessing certain financial service products. People like to believe that they are in full control of their affairs and don't feel like it is right to let out some private confidential information, which means that they are more comfortable interfacing with a nameless individual, interfacing with a platform where they don't have to go and sit down and start explaining away, their concerns here and there. And so I would say that it's both ways. When it comes to in Africa, I think M-Pesa was a revolution. Like, M-Pesa hands down was the thing that puts Africa on the map when it comes to fintech. And there's always this interesting story about who started M-Pesa. Like, you speak to 10 people who say, oh, I started M-Pesa, and that tells you it's been a resounding success. And I think it was really instructive what the Kenyan government did, because the thing about regulation is that too much of regulation stifles innovation. Too little innovation can destroy the market and destroy everyone in the ecosystem and everyone in it. What they actually did was to let the technology lead. And by doing that, it allowed this to mushroom and become like a really big thing, which then flowed into other countries. Like it went to Tanzania, it went to Uganda before it made its way to West Africa. By the time it got to our part of the world, like our part of Africa, we had started to see certain trends. We knew what core technology should look like. We knew what kind of underlying support system within the banking sector that we needed to fit in. We got a sense of what partnership models needed to exist to really build it up, and even how to position it within the market. So that, in essence, did help in a lot of ways. But then a core thing which I would actually also like to talk about is this. When it comes to fintech, we have done well. I mean, Africa has really done well in developing distribution and also in developing products. And I use those words in a generic sense. But what we have really not done very well is developing core IP. So we've allowed things like AI, machine learning, cloud technology to sit elsewhere. And then we buy it, whether you're using AWS or whatever. We haven't really built the internal capacity to be able to leverage on those core technologies that's needed for us to properly position ourselves and to grow. The reason why this is important is everybody talks about the valuation of Tesla, right? It's probably it's now like, the biggest company out there. But you and I know that Tesla will never get to the production capacity of a Toyota. That's never going to happen. That's because functionally, we used to measure wealth by underlying assets. That's changed. It's no longer assets which determine value. It's now knowledge. So what kind of IP are you building in this space, and will determine how valuable your business is. Not about how many cars you ship or how much infrastructure or how much products you have.